gold has broken out and is forging ahead, and a giant cup and handle pattern base is completed in silver that promises a major bull market. And even now, silver and silver investments are still at great prices. Hi, this is Mike Maloney coming to you from my backyard. I wanted to expand on my last video, and my last video was mostly about precious metals and how things are just taking off right now. And now we've had a few days rest, which I predicted in my last video. We were getting to where we were too many up days in a row, and it needed to have a rest. So we're going to look into that in a moment. But first, we're going to look into why this thing is going to be so huge. And Just Dario posted this, and it is an excellent explanation of why things will be so huge. It doesn't matter where in the world that the problems really start. It's going to be a contagion that sweeps the world because, largely, of these derivatives. All economies are so heavily linked right now, and China is having some severe problems. You know, I commented on China earlier, but look at options trading was one of the things that caused Black Monday in 1987, one of the largest stock market crashes in history. You know, it's still sort of, the jury is still out on exactly what happened and how it happened, but options had a very large portion of why this thing spread around the world. It actually started overseas and then swept in the Asian markets and then swept into the, you know, around the world in 24 hours. So it was quite something, but look at the scale of options now, and that last bar is 2024. If you look at this, he says, just to help everyone to picture the magnitude of things today, better I highlighted in the chart the 1987 options volume when computer-based strategies triggered the infamous Black Monday stock market crash. And then the next post, it's only March, and stock options volume is already above the total for all of 2003. So in the first quarter, we have exceeded the total. And so you saw in the 2008 global financial crisis how the derivatives just exaggerated everything, just made everything just totally out of control. Well, look at, you know, where we were back then in 2007 and 2008 and where we are today. It's a whole different world. Also, I talked about real estate. Because there was less homes being sold, that means there were less mortgages being made, which means there are less loans being made than paid, which means that bank credit portion of the currency supply contracts, and therefore the M2 currency supply contracts. It falls because of that. Well, this is a poll, a survey of consumers about, you know, buying conditions. Do they feel like buying a home, or are they? So if you look at this area here in this red box, buying conditions equal share reporting good conditions minus share reporting bad conditions. So 100 would be the equilibrium line. Everything above that is a positive condition, and people are more willing to buy a home rather than wait. Anything below that, they're very hesitant and they will wait. And look at where it is today. The lowest level since we started measuring this. So who knows? It could be the lowest level since the Great Depression. I have no idea. Now, I showed this video of, you know, new massive lines from across China as citizens rush to buy gold in an effort to preserve their wealth amidst declining economy. When I showed this, at the end of that video, I read from my book, and I read part that was cut from my first book, and I was talking about remembering back in 1979, 1980, the helicopter shots. Channel 5 News was, I believe, the first news agency, television news company to have a helicopter. They called it the Channel 5 Eye in the Sky. And I remember watching the news and seeing these helicopter shots of a coin dealer that was just a couple of miles up the street from me, basically. And the lines went out the front door and up the sidewalk. And this is a sidewalk on a major city street, so it's like 15 feet wide. And then around the corner and down the sidewalk. And there was the news media interviewing people in line. And the panic that was going on was, and I said, this hasn't happened yet. Well, it has. It's happening in China right now. It just hasn't happened in the West yet, but it will. And so moving on from that, Clive Mond, excellent chartist and excellent precious metals analyst, posted a couple of tweets. Now, when you see his tweets, the best thing to do is to go to clivemond.com. When he's got a tweet on gold or silver, it means that he just came out with his latest gold or silver update. And he does really good charting and analytics. And so he did a couple of tweets, and each one has a couple of charts in it. Gold's long-term chart shows why the bull market is now starting, why the bull market now starting will be of unprecedented magnitude. And the short-term chart shows why the next big up leg is imminent. And then the silver charts, the environment we are moving into, nothing beats silver and silver investments, and they're still cheap because silver has not yet broken out into new highs. It hasn't overcome some of its resistance. But it doesn't matter because gold drags silver all over the place, and as gold keeps on setting record highs, silver will be pulled through these resistance lines, and then it'll be a slingshot move, followed by another resistance, followed by another slingshot move. And so, going to Clive Mond's articles, the gold market, always read the gold market update first, because very often he will refer to the silver market, in the silver market update, he'll refer to something he said in the gold market update. Today there isn't the case for that. But he shows the big cup and handle that I've been showing myself, and especially to my insiders, for years. And it's good, go ahead and read all of the notations that he makes in these charts, because they're very, very good. And then he shows the resistance and talks about the triple top and that we finally pierced this triple top, but he doesn't talk about the inverse head and shoulders on gold, which was, talk about one bullish pattern reinforcing another bullish pattern, reinforcing another, so you've got the triple top that we then broke to the upside, which is a very rare thing, but when that happens, it's because there's incredible energy stored and a very powerful move behind it. He showed the cup and handle. He didn't show the inverse head and shoulders in this series of charts, at least, that I've been talking about for a long time. And as soon as it was repelled from this third of the triple tops, I said, I think that this is building a head and shoulder, an inverse head and shoulders. And that turned out to be exactly what is happening. And then he goes on and covers the resistance area of the handle of the cup and handle, which is part of the inverse head and shoulders. And then he's going to zoom up on this. And this is something that I have not analyzed yet or covered, but it's very nice to see that now that we're in this little consolidation, that this is a bull flag. When a flag is symmetrical, when it breaks to the upside or the downside, it's usually, more often than not, in the direction of the previous trend. And the previous trend is up. When it's down tilted like that, it's just storing more energy, and it's a lot more likely to break to the upside. So this is called a bull flag. And then moving on to silver, we're going to, he does in the silver analysis recognize an inverse head and shoulders pattern, but the same huge cup and handle. However, there is resistance in this area where there were a lot of buyers that have been underwater for a couple of years. And when we get up to that level, they'll go, oh, I'm back to even though there's been huge inflation in the meantime, and they're not really back to even. But they'll sell. thinking that they've got their head above water again. They can sell this thing that went down, and what they should have done is bought more of it while it was down. This is what I did with Tesla stock. I bought at the first big dip coming off of the high, and then I bought again on the next dip, and again on the next dip, and then on the dip down where it fell to about 100 bucks. I loaded up on enough of it to where I would still be in profit. However, I'll show you in an upcoming video. I made some sales on that stock that I disclosed to my insiders when it was up just before Christmas, I think, and then on January 4th. And it has fallen by a third since. But he talks about the cup and handle here and the resistance that we've got to overcome. However, as gold rises, it'll drag silver right up through that resistance. So gold has already gotten more expensive. Silver is the thing that is the bargain right now. And he says the case for silver could not be clearer. Gold is broken out and is forging ahead, and a giant cup and handle pattern base is completed in silver that promises a major bull market. And even now, silver and silver investments are still at great prices. So this has not already made the major move, but it will, because of all these bullish patterns and which traders trade on. These patterns become self-fulfilling. It seems like reading tea leaves and goat bones, but it's actually something that so many traders are paying attention to that it does become a self-fulfilling prophecy. Then this is the silver-gold ratio instead of I usually show it as the gold-silver ratio because it's easier to understand. It's expressed in ounces. How many ounces of silver does it take to buy 1 ounce of gold? It's just an exchange rate. This is an exchange rate inverted, and so you get how many hundredths of an ounce of gold are required to purchase 1 ounce of silver. And basically it's showing that right now silver is incredibly cheap, and by following the gold-silver ratio and allowing it to sort of dictate what I'm going to buy, paying attention to it, and it kept me from, there was a period where silver, back in 2011, silver went crazy and went up to 48 bucks, and I wanted to buy silver so bad because it was running, and most people chase they chase after momentum after it's too late, basically. And I wanted to buy silver, but I stopped buying silver completely because the gold-silver ratio was telling me to buy gold instead. And so, and then when the markets crashed in the COVID crash, the pandemic plunge for silver, the gold-silver ratio rose from the 80s, and suddenly it was up at 120. And I wanted to buy gold. Everybody wanted to buy gold. Gold is the safe haven that you think about when everything is falling apart, and it looked like the world was really falling apart right then. But the gold-silver ratio wouldn't let me buy gold at those prices, and silver was so cheap when it plunged down here. So I was able to accumulate a bunch of silver because I was paying attention to this during that COVID crash, and it was great. Anyway, here he does show the inverse head and shoulders, and that this will, if you take this, the neckline on the head and the shoulders, you flip the head upside down, that's the predicted move, which gets us above all of these resistance lines. And all it takes is gold to continue rising a little bit, and silver will make this big move, and the gold-silver ratio will change quite dramatically. Moving on, Tavi Costa shows that silver just poked its head above 15-year resistance on the quarterly chart. And I want to point out that this is so each one of these bars represents 3 months. These are quarters. And yes, it has broken out. Now it needs to stay above that, which I believe it will. And then what we need to look for is for the weekly chart, the monthly, the weekly, and the daily charts to all start lining up with this same breakout type of pattern. And then in my last video, I showed this where the price of silver in China, silver contracts traded in China on the Shanghai exchange, were $2.19 above the COMEX silver price. And so that creates an arbitrage opportunity. You can buy silver here, take delivery, pay for it to be shipped, because per ounce it's actually not that expensive, and make a big profit selling it in China. And so a spread like this does cause a transfer of assets to go from one place to another, and that's what helps balance out the price globally. But Peter Spina today says that the silver price in China is now trading at $27.75 an ounce, which is about $2. It was, the last one was $2.19 over the COMEX price. Now it's $2.50. And so this rush for gold and silver that we're seeing in China is really having an effect. So I want to wrap it up with something from Egon von Greyer's, and it's, jump on the gold wagon while there's still time to preserve your wealth. The coming surge in gold demand cannot be met by more gold, because more than the current 3,000 tons of gold per annum cannot be mined. And that is the truth. Thus, the only means to satisfy the coming gold mania is through much higher prices. I want to thank you for watching, and we'll see you next time.